So Thailand has recently introduced new guidance on how tax law should be applied from the perspective of foreign income. And this has a potential impact on retirees, investors, remote workers, entrepreneurs. And so it's really important to clarify how this might impact you, and also kind of correct some of the information that has been going around, because naturally, because this could be so impactful, it's attracted a lot of media attention, and as a result with that, there's a lot of confusion. So if you're new to this channel, I'm Andy. I've been an international tax advisor since 2014, a chartered accountant since 2018, and I help you navigate the complex world of international tax. So yeah, there has been a lot of misinterpretation and confusion and misinformation going around, just because I think people are probably panicking and kind of scrambling around to try and piece together what's actually going on. But in general, actually, it's not too much of a change. So first of all, what is actually changing? Well, to clear up one misconception, the law is not changing at all. So what's really happening here is the Thai Revenue Department, who are the authority that are tasked with collecting Thailand's taxes, they're changing their interpretation of what the law is. So specifically, their interpretation of how foreign sourced income should be taxed. So historically, the interpretation has been that if you're a Thai tax resident and you earned money from a foreign source, that could be a business, contracting, investments, property, you would only be taxed in Thailand if you brought that money into Thailand in the same year that you earned it. So in other words, foreign sourced income remained non-taxable if it was brought into Thailand in the following calendar year. But with the introduction of this new guidance, from January onwards, any foreign assessable income that you bring into Thailand will be taxed, irrespective of when you earned it. Now this is a key point. This relates to assessable income. And that's where we go back to the point of the laws not changing. Assessable income for Thai income tax purposes will remain as it's always been in Thailand. This won't create any new types of income which can be assessed. And broadly, assessable income has been earned income such as business income, employment income, and an unearned income such as dividends, interest, pension income. And so these are very typical income sources which, consistent with most countries, the type of income which will be assessable is not going to change here. And this clarifies one confusion that I have been asked. So people have been worrying, well, if I have savings income and I bring it into Thailand, is that now taxable? So the answer to there is no. One of the articles which broke the news actually just had some misleading wording which suggested that if you bring savings into Thailand, it could now be taxed. But what's actually changing, again, going back to it, is the assessable income. Savings income is not assessable income in Thailand. It has to be derived from an actual earned or unearned income source, an earned or passive income source. Moving money between your own accounts is not income from the Thai perspective, and I've never actually seen that in any country. So you don't have to worry about bringing your savings into Thailand. That side of it is fine. What is potentially changing is any income that was previously untaxed in Thailand because it was foreign sourced and it wasn't being brought into Thailand in the same year. This can now be taxable in Thailand. A very common strategy that has been used by many people in Thailand when they have foreign sourced income is basically to allow that income to remain outside of Thailand until the following calendar year. So for example, perhaps you earn some dividend income from a UK company. You just basically ensure that those dividends do not come into Thailand until the following tax year. And historically, that has just meant that that income would not be taxable in Thailand. Now, a lot of people would get a lot of tax advantages here because as a non-UK tax resident, let's assume, you wouldn't be paying income taxes in the UK on those dividends, and then you eventually wouldn't be paying income taxes in Thailand. So basically, that sort of tax-free loophole is being closed off really, and this is the kind of people that are being affected more. So another area of confusion and misinformation is double tax treaties. I see these mentioned a lot, especially amongst journalists and people who will often say, well, I'm in a double tax treaty country, therefore this doesn't affect me, this won't change anything. And again, this is a little bit of a simplistic view. I don't blame people for not understanding. Double tax treaties are extremely complex parts of international tax law. Many accountants and lawyers won't have a full handle of every aspect that could potentially impact you from a double tax treaty perspective. So, the average layperson is not really going to know what they're dealing with here. But it is important just to know the basics, and the problem is most people aren't really getting the basics of a double tax treaty. The key fundamental of double tax treaties is that they allocate taxing rights to one country or another. Now, effectively, taxing rights can only be allocated if both countries have a potential claim to your income. And this is where one of the key misconceptions come about. So people think their citizenship matters when it comes to double tax treaties, but with the exception of the US, your citizenship is usually irrelevant. Now, this is irrelevant because most countries don't have citizenship-based taxation systems. Most countries operate on a residency and source basis of taxation. And this broadly meaning that they can tax you if you're a tax resident or if you have income sourced from that country. Now, this leads on to another misconception. People think that if they lose their tax residency in their home country, then they no longer have taxes to pay there. But this can be wrong because you might still have income sourced in that country and is therefore potentially taxable in that previous country. So, for example, the UK uses a residence and sourced principle of taxation. You could leave the UK and become a non-UK tax resident, but you might still have rental income from a UK property or UK pension income. Now, these are both considered to be UK sourced income. So, under UK tax law, you potentially still owe UK taxes on this UK sourced income. But this is where the UK-Thailand double tax treaty will come into play, because Thailand might also look to tax you if you're a Thailand tax resident. And so in this case, to avoid double taxation, you've got to consult the double tax treaty and then confirm which of the two countries has the taxing rights over that specific type of income. However, let's say that you have no UK sources of income. You're not a UK tax resident and you are a Thai tax resident. So the UK has no claim to any of your income. Therefore, there's no dispute over taxing rights between the UK and Thailand. And here's an example where your citizenship of the UK just doesn't matter. The UK-Thailand double tax treaty doesn't protect you because your tax obligations are solely based on Thai tax law. The UK has no tax law to bring you into their system. There's no dispute there, and therefore Thailand has the full taxing rights and the double tax treaty is irrelevant. So this also applies if you're a citizen of any country which has a residency and source basis of taxation, which is most countries. It includes all EU countries, Canada, Australia, most Asian countries. And so in the vast majority of cases, if you're not American, this is going to be the case. So for Americans, it is slightly different. I think most people will be aware that America is unique in that it has a citizenship-based taxation system. And so if you retain your US citizenship, but you become a tax resident elsewhere, you'll always have to look at the double tax treaty in question, because you'll always be subject to US income taxes, and then there's always going to be an effective dispute between your new country and the US. So if you trigger a potential tax charge in Thailand, then both the US and Thailand might look to claim that income. So here we have a situation where taxing rights do need to be allocated. And so in this scenario, you'll have to check the US-Thailand double tax treaty for your specific income and see who gets the taxing rights according to that double tax treaty. But for now, it's just important to understand that the double tax treaties are really in place only when there's an effective dispute between two countries as to who gets to tax the revenue, and then in the case where there is some sort of confusion as to which one gets it, well, that's when you look at the double tax treaty, and that's when you establish where the tax is actually going to be paid. So hopefully this has provided some clarification into the key areas that you need to think about, and hopefully corrected some of the areas that I see being kind of misreported or misunderstood. Ultimately, I could have talked for hours about all the different things to think about, because you've got a lot of complexity here. You've got not only Thai local tax law, but then you've got multiple interpretations of that tax law, and then depending on your specific situation, you could have complex double taxation agreements to bring into play as well. But for now, hopefully this has provided, a useful kind of starting insight to understand the kind of key things you have to think about. I'm constantly speaking to people on the ground, just trying to find out if there will be any more guidance issued. Probably will expect that to come just as a result of all the uproar and people just needing more sort of confirmation as to what's really going on. But yeah, for now, hopefully this has been a kind of useful introduction. Highly likely I'll make more videos in this area in the future. And if you've got any specific comments or questions for now, just give me a shout in the comments section below. Cheers.